Hi, everyone. Welcome back to Wall Street Silver. Our guest today is our good friend, the legend, the silver guru, David Morgan from the Morgan Report. Great to see you again.
Good to see you, Ivan and Jim. Thank you for inviting me.
Absolutely.
Hey, so Mr. Guru of Silver, obviously we have to ask you about the silver chart, and it has not been pretty lately. So I hate to put you on the spot, buddy, but what the heck is this?
Yeah, well, I'm actually pretty friendly with Ed Steer. I mean, I've known Ed for a very, very long time, well before he started writing for Doug Casey. And then after that few years, he started branched out on his own and he does a daily update. And he keeps going. I think the last three were 8 days in a row, 9 days in a row. And today's missive was 10 days in a row. So highly unusual to see that many in a row. And I would say the 2150 is kind of the magic number here, Jim. We've bounced off that level a couple times. And as I've often said in the commodity sector in general, 3 times is a charm. So usually on the third time, we're going to know, which means does it hit 2150 or thereabouts and bounces up? Or if it breaks through 2150, then we are in a situation where it could go to 18. One of our premium members asked me a few months back, how bad could it get? And I showed the chart and I said, could get to 18. I don't think it will. I think 2150 will hold. Couple of reasons why. One is 10 days in a row. Secondly, the commitment of traders has improved dramatically from the last report. I think it's something around 72,000 contracts have left from the open interest. And the selling that we saw Friday and Monday would add to that. So more stops for run, more people got margin calls, more people bailed out. So it probably lowered the open interest. So I think commitment of traders wise, we're pretty close to the bottom as well. So chart wise, technically, and commitment of traders reasons, I think we've probably seen the worst. How can you stay bullish? Well, if you look at what's overvalued and undervalued, and a big money knows this. I mean, the sector is so undervalued, especially silver, that there will be some allocations coming in. What was really surprising, Jim and Ivan, was getting the silver survey this year from the Silver Institute. The retail demand on silver was probably as high as it's ever been. Somewhere, I'm doing this from memory, somewhere around 270 million ounces. But in 2020, we set a record because the institutions came in at 320 million ounces. Last year, the institutions basically begged off. They hardly bought any. I think the number was 65 million. So that's where the big change was year over year. 2020, massive institutional buying. 2021, hardly any, relatively speaking. And when the institutions run into gold, they will spill over into silver, and that's what's going to take us higher.
The other big news recently that we probably need to address is the negative GDP numbers that have been popping up. Surprising to it's the mainstream media. It was surprising. We've been sort of expecting this for a while with all the things that have been happening. Negative 1.4%. That was a huge surprise. I think they were expecting positive 1%. And it sort of gives you some pause to wonder how can the Fed really keep raising rates with a negative 1.4% number? It's like they got to choose, right? Are they going to fight inflation or save the economy? This is the trap. It's now perfectly clear.
Well said, Jim. You're right. I mean, I can't say it's a recession, although it is. It's just basis what the mainstream or what the proponents say is it's got to be 2 quarters in a row. So that means we've got to wait another 3 months and then, a month after get the report. And then if it's negative, oh my goodness, we're in a recession. Well, we're in a recession. We're in a huge contraction in the economy globally. And it will come out next quarter that we're in a recession.
Yeah.
And the question you asked, will the Fed be able to continue to increase interest rates if and only if they really want to destroy the economy? And I can't rule that out of my thinking entirely. If we go basis past history, they're going to make a U-turn and quit tightening and ease whatever little bit that they can. But if they are really in the mode of this reset thinking and they want to just basically take the dollar to oblivion, it could happen. That's not the way I'm leaning, Jim and Ivan, but it is possible. How much? Don't know, probably less than 5% possibility, but I won't rule it out. And lastly, you know, the bond vigilantes can get ahead of this whole thing. You know, I mean, the Fed really is reactive to the markets. It really doesn't lead, although they like you to believe they do. So if the markets go pretty cuckoo crazy and the stock market really starts diving, everything indicates they'll back off, they'll ease, and they won't tighten.
Yeah. If the Fed were to pivot or even to signal that, all right now everyone's pricing in 8 or 9 more rate hikes for the rest of this year, I don't think they're going to get there. I mean, I don't know how, especially if there's another GDP print. I mean, we probably have two more Fed, the Fed meeting that's going on this week, or they just announced, and probably one more before we get that second GDP number that we're officially in a recession. I mean, how do they keep raising when you? I mean, unless he wants to become Paul Volcker, right? Saying, I don't care what we do to the economy. I'm killing inflation. And I don't know if he has the same mandate that Volcker had to be that brutal right before the 2022 election, the midterm elections. I mean,
let's examine that a bit further, because you make an excellent point, Jim. I mean, basically, it could be ratchet the rates higher and higher and higher. What will that do? That will save the dollar. That's what it will do. If they back off, basically they're submitting to the fact that the dollar is a fiat Ponzi scheme, fiat fiesta Ponzi scheme, and all fiats fail. And if they back off, as we both expect them to do, then that signals to the markets in general that they're not going to defend the dollar, spend it fast. We're going into a inflationary situation. Not, I wouldn't say hyperinflationary, but certainly the dollar. 20
or 30% inflation pretty much destroys the economy pretty damn fast.
Yeah,
you don't need hyperinflation to do that, right?
Exactly, and that's been my contention all the way up, is that you don't need Zimbabwe type inflation to destroy the economy.
And you know, you just said the dollar is strong, and on DXY, yeah, the comparison versus the euro or the yen, especially the yen's is tanking right now in recent weeks. You know, the dollar is already strong, we'll call it strong relative to other currencies, but isn't there a point where that becomes a concern also in terms of trade? I mean, if the dollar gets too strong relative to the euro and the yen, it just kills our ability to export anything.
Exactly.
So I mean, there's a point where the Fed and the U.S. Treasury Department doesn't want the dollar getting it doesn't want a 110 DXY, right? They're probably freaking out already at 103.
Well said, Jim. Again, I mean, yes. So there's pressure. As I said, the Fed actually reacts. It really doesn't lead. Yeah. So they'll see that, and then basis, you know, the trade relationships. So probably almost have to lower the value in order to keep the trade imbalance less imbalanced than it already is.
Yeah, it's a little bit out of their control at this point. The other thing that's been real big in the news that I wanted to get your take on is obviously with higher interest rates, the mortgage market seems to be falling apart. Refis have just fallen off a cliff by 60 or 70%. What are we up to now? 5.5% for a 30-year fixed mortgage. I'm seeing a lot of layoffs from Wells Fargo and Rocket Mortgage and a lot of others. But it hasn't really shown up in the prices in the market yet. Or have you seen anything that you're watching out there right now?
No, but you're correct. I mean, one thing that's kind of a bugaboo to me is that the interest rate meme is always about, higher interest rates are going to destroy gold. No, not until they get to a positive rate of return or close to it. But what it does destroy is the stock market and the mortgage market. And I'm really happy you're pointing this out, because this is going to really put a damper on mortgages across the board, both residential and commercial. And yes, the prices are kind of hanging in midair, but they will come down because the cost of borrowing money is going up, which means the prices, in order to maintain some type of sales structure, has to come down. I just want to add one thing. This goes back to my personal history, but one of my family members, before she bought her first house, was arguing with me that, owning a home is the only way to go. You're throwing your money away renting and all this stuff. And I pointed out that, when you buy a home with a mortgage, you're either renting a home or you're renting the money to buy the home, which is what a mortgage is. I mean, interest rates are the price of what we call money. And you have to factor that in. So it went full circle, Jim. I am not bullish real estate at this point in time. I'm not bullish the stock market right now. I'm still bullish the metals, even though they're getting hammered here. And I do think that the Great Reset is taking hold, and the outcome is going to be very, very interesting for people that are unaware, people that don't tune in to Wall Street Silver, people that really only follow the mainstream financial press. I think they're going to have a day of reckoning in the not too distant future.
A lot of members on Wall Street Silver and in the gold silver community, and I see it all over Twitter. Everyone's despondent right now because silver and gold are not really behaving how we would expect. But the thing I'm watching for right now, and you tell me if you are also, is the first sign of this Fed pivot. If the Fed decides to, they've got to save, I think this is where I think they're going to decide they got to save the economy, and inflation will become less of a priority, especially with the political pressure of the 2022 midterm elections coming up this summer. And the Fed, right now, of course, all the pressure's on them to fight inflation, but we start seeing unemployment tick up, we start seeing the market keep falling, we start seeing the housing market roll over.
Right.
Then all the political pressure now shifts to saving the economy. That means easy money is coming back. And I think, would that be the trigger for silver and gold to launch at that point?
Yeah. I mean, it may not do it the day that the Fed announces they're, as you say, pivoting. They're not going to tighten any further, or they're going to loosen, or combination.
We're going to pause, maybe pause and
pause. There you go.
Yeah, that'll be the first sign.
So that's a sign to the markets that they don't care about the dollar being destroyed. Mm-hmm. And that means higher inflation, which means the dollar becomes weaker relative to what? Relative to gold, relative to the DXY, relative to everything.
Yeah. Hey, I just met you in Las Vegas a few weeks ago, and you're headed back there again soon. I wanted to put this up here. You're going to the Money Show. Nice. Tell us about that.
Well, before I do, let me just point out that I received this from
Jim
Lewis himself.
Oh, wow.
Wall Street Silver. That is the obverse, and that is the reverse.
Oh, that's a cool rocket. I've never seen a silver round with a rocket on it. That looks special.
So right. What is the idea behind this silver round? The obverse says this is the way. So what is that relation to?
Star Wars.
Well, it's the Mandalorian. It's his slogan. We stole it. We probably could get sued for it.
Yeah.
I don't know if they copyrighted that slogan.
This is the way.
But we're stackers, right? This is the way. This is what we're supposed to do, right? We stack the physical, and yep. So it's me and Ivan didn't create that. It just sort of became a slogan,
right?
It's a Reddit thing, right? Everyone talks about it on Reddit. This is the way, and it's not just unique to Wall Street Silver.
Yeah, it's everywhere.
I think a lot of subreddits. It's very common on Wall Street Bets also, and other subreddits to use that slogan. And it's trendy, it's trendy. It's Star Wars. It's the Mandalorian, and we all right. We put it on a coin. We'll see if they sue us.
Okay, good. And now tell me about the reverse with the rocket. What's that all about?
We're going to the moon. We're taking the price to the moon, man.
$1,000 an ounce.
I don't know if I could jump on that. I hear a lot about the moon boys relative to Bitcoin, but I think silver could go to the moon as well. Bitcoin could go to the moon. I think silver could go as well.
Hey, if the dollar's crashed and silver's going up to something, it's right. Like Dave Kranzler's line was, he says, when this is all over, we're not going to be measuring silver and gold in dollars anymore.
Yeah.
So the price is irrelevant at that point.
Right.
But so tell us about what's going on in Vegas coming up.
Well, I've been asked to speak at the Money Show, and the meme down there mainly is about cryptocurrencies. And I've been involved with the Load Project. I am an ambassador, and I put a pretty good sized whack of silver into the program over the last few years. So I think, what we see at the end of all great inflations is competing currencies. And the competing currency that's taken the main meme is Bitcoin and all the, what I'll say, subsets of Bitcoin. Ethereum, XRP, there's so many out there, and certainly I don't know them all. But the idea is decentralized finance and something other than a bank-run system. And I won't go deep into the Bitcoin idea, but I think the next leg up could be, and most likely will be, cryptocurrency that actually has substance to it, which means backed by gold and silver. And of course, the Load Project is not the only one. There are several out there. So the adoption to cryptos has been far greater, let's say, with Ivan's age group than it has been the silver. And yet, sooner or later, I believe, as silver starts to take off and people start thinking a little deeper on what is money and what is value, if you have something like a stable coin, and there's no better stable coin than an ounce or a 10th ounce of gold, or an ounce or a 10th ounce of silver. It could be a hundredth of an ounce, it could be a gram, it could be grain. The idea is that metal is constant in the universe. It doesn't change. So there's nothing more stable than a given weight of precious metal. And I think, without going too deep, that there's going to be a run to the metals. And since the crypto world has been adopted so readily by so many, and especially with the new wallet that's coming out for Load, where we can do cross platforms, where you'll be able to buy with cryptos that you already own into the Load program, I think there'll be a run to the metals backed cryptos. I really believe that. It's easy. It's what the younger generation is used to doing. And once there is the idea that you need some kind of backing, or just that silver's running. I mean, there's a lot of people that made money in rhodium or in palladium.
Right.
It had nothing to do with money. It had to do with the scarcity and the market.
Well, on that note, Mr. Morgan, thank you very much for joining us. And we'll definitely be talking to you again, hopefully when silver's rallying.
I know that we'll come back, Jim and Ivan, when we have 10 days up in a row.
Yeah, I'd love to see a 10-day up and have that conversation with you. This is kind of annoying as hell right now. But until next time, Silver Guru.
Yes, sir.
Thank you.